Meantime, let's also welcome on board Sudeep Shah, who's joining in on the technicals from SBI Securities, and we've also got Hemang Jani with us. Hemang, let me just begin with you and wanted to flag off the kind of move that we've seen in terms of the sell-off that we've recently witnessed since the 27th of September. And of course, a lot of those rate-sensitive sectors have gotten quite badgered, but it's been real estate that's been on top of that list with an 8% cut since the 27th of September. Just wondering how you're viewing this space at the current juncture. Do you believe that now it's a lucrative option to look at some of these names, or would you still wait?
Yeah, good morning, Awan. Thanks for having me. So real estate as a space has done extremely well in the last 2 years. And when you look at the data points, the new sales and the registrations that we witness across India, is looking quite encouraging. And even the business review updates that we've had so far, Godrej Property, Lodha, Shobha was not that encouraging, but Signature Global again reported very healthy growth. So I think as long as the growth cycle continues and there is a good amount of interest in the buying of the new property, even on the rental side, the yields are looking better. So we would have a positive view on the sector. And the good part about real estate this time is that the net debt to cash flow situation continues to remain quite good. So our preferred picks within the sector are Lodha, which has corrected almost about 12-15% from the top, and Godrej Property, which has done exceedingly well and has not corrected much. But I think the overall, fundamentals, the data points continue to remain positive.
Okay, so still positive on the real estate pack. Hi, Hemang, Anish also joining in the conversation. What's the view on power and power ancillaries? Because yesterday, of course, there was those, 4-5 initiations that happened across the board, right from a Tata Power to a Sterlite Power. They were fairly active. Overnight, there's news flow on Torrent Power as well, with fresh additions coming into their distribution network as well. What's the take on power and power ancillaries?
Think overall view there is surely a positive, particularly names like Tata Power, Power Grid, because when we have this entire focus on the renewable energy, green energy, and many of these companies have their big investment planned in these areas. So I do think that there is going to be good amount of interest, even NTPC for that matter, where the subsidiary IPO will hit the market, there is going to be a good amount of positive action because of that. So selectively, we should have some exposure. And we do think that despite the run-up that we've had, there is a decent amount of room on the upside, particularly for names like Tata Power and Power Grid.
All right, stay with us. And meantime, even after the US Fed has bitten the bullet and cut rates by 50 basis points in the latest meet. But Sudeep, let's get in a take from you then. And just looking at some of the buzzers in yesterday's trade, what's the chart suggesting for an ever volatile trend? And have you looked at the charts of Varun Beverages?
Good morning, Aman. When you are seeing trends chart, that's it's defying all logics now. The way the stock has moved up on the weekly charts, it was in March, it was somewhere closer to 38, 3900, and from there to reach 8,000 plus levels. And with a sustained growth in terms of numbers also, it's just a dream run for this stock. And I feel even the move yesterday, the 600 points move, the 8% move yesterday. Prior to that, 6-7 sessions, the stock slowly witnessed some profit booking from higher levels in line with the markets. But yesterday's move engulfed the entire down move, showing that the prior trend was very strong and that could continue also. And a lot of open interest added on the long side. So I feel from the current levels, also the stock could continue its momentum on the upside. Around 85, 8600 levels could be visible within the next 2 to 3 weeks. And on the downside, 7800 levels could act as a strong support.
Okay. I go back to that same point again, Nuresh, that do we have a durable bottom in place? On a scale of 1 to 10, what number would you like to ascribe, Nuresh?
So I would still be, say, a 6 out of 10 because we've not seen a global correction as yet. We've just seen India correct. And if we see a global correction when US markets correct, then we also have to follow up a bit on the downside. So in that case, and also we've not seen more than a 7% correction for quite some time now. So a 10% correction from the top would be normal, and this could happen with any of the geopolitical event or something happening across the world. But that would be a normal correction. It's only when we start going below 23,800 you start questioning the momentum and the trend as such. So as of now, it's a 6-7% correction and not a major one. And it's just been a day of bounce. So if we start sustaining 25,500 going forward, then maybe it is much more easier to call a bottom as being done. But for now, the trade is to go along with a stop loss with the recent lows.
And if markets have to bounce back, Nuresh, will it be beta? Will it be PSUs? Will it be good old defensives? What will bounce back, Nuresh, the fastest?
So in terms of bounce backs, I would expect it to be more selective and slow. Banks could make a bounce back because they're back to the same territory as it was around the election day. And heavyweights, which have seen the hit, may bounce back first. So you have Reliance Industries back to election day lows, which is one heavyweight. Then you have HDFC Bank, which has fizzled off totally. So I would expect a very small bounce. 25,500, which I expect is also a 2-3% move. So in that case, heavyweights only could take it higher. But structurally, we are starting to see a trend which is very different, wherein we'll start seeing new leadership. So if you look at the last few months post-elections, the least favored names, you had IT go up 15 to 20%, you had FMCG go up 15 to 20%, and you had pharma. These three sectors were not even in the reckoning going into elections. And the spike which we saw in exit poll was all about names in the PSU basket and on the manufacturing side, etc. So there could be another rotation going forward. In the same period, if you look at in the last few weeks, you have had diagnostic stocks continue to make new all-time highs. So there could be sectoral rotations going forward from here on. But for now, it should be a bounce in the heavyweights.
Okay. The same question to you also, Hemang. If markets have to bounce back and if there's a new leadership which could emerge, where will that new leadership emerge, Hemang?
So, Nikunj, if you look at the structure of the market, while the indices have remained by and large at an elevated level, the broader markets have corrected, quite a bit from their highs. And now that we are entering into this earnings season where the headline growth will not be very significant. You're looking at hardly about 2 or 3% kind of a growth in the nifty earnings. And so in that kind of a scenario, people would chase the companies or pockets where there is a decent amount of growth, and which is what we have seen. Companies like Indigo, Trend, some of the exchanges like BSC, MCX, Dixon kind of companies. So there are very few themes or pockets where you're seeing a very high growth and sustainable growth, and people are chasing those pockets no matter what the valuations are. So in a low earning growth scenario, I think this theme could play out even more strongly. Though banking as a pocket has not performed unless you see some big surprises, just because the valuations are very reasonable, I don't think there is going to be enough excitement to really take up the banking stocks in a major way. So I think we should stay focused on the pockets where there is going to be a decent earning growth. And from our perspective, pharma, some of the power utilities, and selective IT names, these are the pockets where we expect positive surprise.
Hemang, I have a very different thought here, and we may agree to disagree here. That's what markets are. My point is that banks, in the light of what other sectors were doing, were looking like poor growth sectors, because other sectors in last 2 or 3 years, they've grown at 20-30%. Banks have not demonstrated that growth. Second, other sectors will slow down, but banks will grow at 12 to 15%. Third, the base effect next year will start kicking in for other sectors and for banks. So optically, banks will start looking interesting. So my point, Hemang, is that in a relative world where everything is looked through the relative lens, banks, and at least private banks, which were pockets of stress growth and other sectors were blooming, banks now may just be the big beneficiary of the base effect.
So Nikunj, see, the interesting aspect about markets is that when you try to buy something because apparently it looks cheap on valuations, the waiting period can be, very, very challenging, right? So I think though banking has underperformed, and we may all argue that the valuations are on their side, market would look out for data points or triggers where you will see that sector coming back into the limelight. So my belief is that once you see that actual print and when you see the price action, that is when it would be good to kind of participate rather than participating, beforehand and then getting frustrated that it's not actually performed. Just to give you a sense, HDFC Bank, ICICI Bank, State Bank of India, Axis Bank, they have been underperforming for an extended period of time, and it's not as if that the performance was not good. ICICI Bank reported very good set of numbers, and almost for 3 years now it's performing. So the market is probably giving you a signal that things are not looking that great in terms of the participation. So I would certainly go with the pockets where there is actual delivery at the ground level.
Naresh, what would you sell in this rally? And Sudeep, I'm coming to you with this question. What would you sell in this rally that, oh my God, this is a stock I wanted to sell and I'm getting a pop today or tomorrow or yesterday and I should exit? Naresh?
So, say the sectors which are looking to top out, I don't have ownership over there, but if you look at it, it is the whole PSU railways defense basket, which is where there has been already been a 25-30% correction. Given that there has been a 30% correction, there should be a bounce, which would give an opportunity to reduce an exit out of that. Whenever we've seen a 30% correction in an ongoing bull market, the sector generally is an indication of a top, which may not be crossed for maybe 6 to 18 months also possibly. So I would not expect the defense names to go back to the highs for the next 6 to 18 months. So in that case, say we've gone from say 100 to 70, it goes back to 75, 80. You see a spike towards those levels. You want to get out of that sector and shift to the other names. So the whole overrun sectors, railways, defense, and there could be micro sectors in the small cap, mid cap space one needs to be careful about. And say if one has to be careful, it is more on the SME side where the ownership is very cornered. The stock prices have gone crazy. So when that shifts on the downside, it tends to hurt a lot more. So SME is one space one will need to be looking at reducing allocations.
Sudeep, the same question. Where do you think some of these so-called patronized mid-cap stocks are headed? Vodafone, Suzlon, Yes Bank. What should a trader do?
Nikunj, see, if you see a stock like Vodafone now, we have had extensive discussions in the past, and what had happened is that the breakdown below 13 and a half levels or 12 and a half, which was the prior swing low for the entire 2024 year till date. So now what we're seeing is that there are people still buying on this, but the stock is not ready to move up. So at least I guess there are a lot of other opportunities available. So my only view here would be to exit on every rise, not to try and do bottom fishing, and just add quality stocks on these declines, because the markets from a long term perspective, we all know that it is in a very good shape, but it is this short term time frame that we need to just tide over and at least ensure that we do not enter into these names from a quick returns perspective, because from here on the stock selection would remain the key. And I feel these names, whatever you mentioned, Suzlon, Vodafone, Idea, now beyond a point, you don't see any more value in them. So here, I guess it will be that you have to go back to your old school names, whether it is IT, whether it is pharma, because in these kind of last 6-7 sessions when there is profit booking from higher levels, we've seen mid caps from the IT, pharma, or the large caps really outperform. And I guess these are the stocks that instead of these stocks one buys, those sectors are much better from a long term perspective and from one's financial health perspective also.
So that's the view coming in on some of these select names. But Hemang, wanted your view regarding the latest kid on the block, which is Hyundai. It's going to be the largest IPO this country has ever seen, even bigger than that of LIC, Coal India, and the likes. What's the expectation like? Would you recommend a subscribe there?
So, Anisha, first of all, if when the markets have been so volatile and so much of liquidity has been sucked out, it's not a great news that almost about 27,000 crore of liquidity is going to be sucked out. And definitely that's not a great news for the broader market. Now, coming to Hyundai per se, I think it's a great name. I think they've done reasonably well in the Indian market in terms of their product launch, performance, etc. But what we have to bear in mind is that the passenger vehicle as a category is slowing down. If you remove the SUVs, the compact SUVs part, the sedan cars and many more categories are not showing any kind of a meaningful growth. So I think it remains to be seen what kind of growth one can really look at. Though there is going to be a lot of participation because of the pedigree and the brand, but I'm not too excited by the IPO per se. I would rather look out for better opportunities in the secondary market.
Your take, Nikunj, about Hyundai. Excited about this one, or you concur with the view of Hemang is saying that it will suck the liquidity at the time when we are already not in the best shape?
See, I always say that when a company is going public, what is the importance? Are you going public just for valuations? Are you going public because you really need the money for... you come to capital markets for growth capital.
Correct.
Does Hyundai need growth capital? I don't think they need growth capital. So you're
It's
going...
just the promoter who wants to make hay while the sun is shining in India.
Exactly. One. Second, this also has been done because then the Hyundai stock which is listed, the sum of part valuation in a sense really benefit from there. So if you're going to capital market and if there is a fresh supply, what is the purpose? Second, the auto space is very competitive. And B, there are auto companies which are already listed with the exception of, let's say, Hyundai, which is a big one, which is making a comeback. But the auto sector, I think the other large players are listed, which means that there is no scarcity premium here. Third, this space is going to really see a big change. It's only in hindsight we'll figure out whether the EV guys will win, if China is an example, or whether ICE, guys would dominate if US is an example. So in that, who will be the ultimate winner? Will it be an incumbent? Will it be a disruptor? Will it be a challenger? I don't know. I've always said that this is a cyclical sector. It's a sector where margins are not really great. It's a sector where you have intense competition. It's a sector more than getting the theme right. Sometimes you have to get the cycle right. So it's not like this is a very niche company which is going public. If the company goes public with the cash which comes in, will anything change for the stock per se? Is it something which is going to be a re-rating moment for the business of Hyundai? The answer to that, all that is no. The size of the issue, I'm not so worried about the liquidity per se, Anisha, because if there is a good company which is coming out and which is going public, I don't think there is a liquidity scare, considering that mutual funds are sitting on cash, the retail folks are sitting on cash, FIs have been selling, DIs have been buying. So I'm not such a big believer that liquidity is going to be sucked out, but is it one of those issues where you would see a real, rage like what we saw in terms of Bajaj Housing Finance? The answer to that is no. It's a good brand, it's a good company. They will get all the necessary subscription numbers, but unlike a DMart which happened a couple of years ago, a Bajaj Housing Finance which happened recently, will it be a crazy go-to listing? The answer to that is no. So it's not like a stock you want to buy for IPO pop. It's a stock where you would say that, look, I'm bullish on India, I'm bullish on what they've done. It's a compounding machine for me. But can they do what a Maruti has done in last 20 years for shareholder wealth creation? The answer to that is no.
Yeah, but I think what is also important is to try and understand how the portfolio allocations will change within auto. So not maybe an IPO pop, but what does it mean in terms of how the ownership is stacking up is also something that will be interesting to watch out for. But separately, of course, it's 9 a.m. and we'll see how the entire bond market and rupee market is also reacting. Remember, this morning we woke up to some positive news wherein FTSE Russell has included India's FAR bond in the emerging market government bond index as well. So this is the third one which has happened, in terms of the inclusion which is coming. Of course, we're waiting by for the big one, wherein we are expecting a huge amount of inflow to come in, but this one is as well a positive coming in there. But separately, in terms of the other news flow that we are watching out for, we do have a couple of stocks which are going to be in focus today. Zomato as well is going to be in focus on account of reports suggesting that there could be some cost escalation that might come their way, given the fact that the overall cost of employees and workers and gig workers might just go up. For now, that stock is holding up in the green. What's the view, Hemang, on Zomato now? It's been a while that we've spoken about it because it's gone a bit sideways. 280, 300 has become the new range. What's the sense here?
Anisha, as I outlined earlier, the companies which are delivering and which are showing very high growth and growth visibility both, I think people would want to participate there no matter what the valuation is. And from this quarterly numbers perspective, even the way Blinkit has performed, even the food delivery business, I think there is going to be a lot of positive action. You might see a little bit of corrections here and there, but broader trend for Zomato is extremely positive, and we have a about 30% higher target on Zomato from current levels from a 12-month perspective.
Not worried about the competition which is coming in quick commerce. I mean, Big Basket is now giving a iPhone in 10 minutes. Flipkart has moved into quick commerce. Reliance has plans to move into quick commerce. Zepto has raised cash. Won't the competition really intensify for this for the quick commerce franchise, and which will hit Zomato? Hemang?
I think Nikunj, competition will be there eventually. Right now, we had only two major players. Now, on the quick commerce side, you have Zepto, which is doing extremely well. But I think the market really, would reward handsomely to the player who has been early mover and who is able to show a good execution and growth, right? So from Zomato, I think it is ticking all the boxes. You have a Swiggy, IPO, which is going to come about, which will create, excitement for Zomato also. And I do think that, a company like Zomato, where the growth, if it is, let's say 35-40% for next 2 or 3 years, which looks quite sustainable, market would really want to give it a high valuation. So I am not too much worried at this point.
I'm going to let you go. Thanks so much for joining in and sharing with us your thoughts. Let's find out those mid-cap trading strategies as we take in the pre-open rates this morning. And it's slightly positive bias for the Nifty, Sensex holding out comfortably in the green. Sudeep, your top mid-cap trade.
Yeah, so there are a couple of mid-caps that I like, and one of them is from Pharma and one of them is from IT. Now, the first one from Pharma is Glenmark Pharma. The stock is in a structural uptrend. The last few sessions, right from 18th September till 1st October, the stock witnessed some kind of profit booking from higher levels. Maybe it's just consolidation, 3 to 4% down move. But yesterday's move has engulfed the entire 10-12 days consolidation. And we have seen a strong up move on this counter yesterday with a lot of delivery-based buying also visible. So I guess from the current level, 1700 could act as a strong support, and this can be bought with a stop loss at 1700 for a target of 1800, 1820 on the upside. The second stock is LTI Mindtree. Now here also there is a similar structure. The stock is in a continuous uptrend right from the month of May. Few sessions right from mid-September till day before yesterday, the stock was in a consolidation with some kind of profit booking visible from higher levels. But yesterday's move has once again taken the stock back above its 20-day exponential moving average, and now the stock is firmly holding above its December 2023 and Jan 2024 swing highs. So that gives us confidence that yes, at higher levels also this stock is witnessing buying support, and this is good to go for around 6550, 6600 on the upside, and can be bought with a stop loss of 60 to 80 on the downside.
Sudeep, on that note, we let you go. Thanks so much for joining it.
There comes a time when your heart calls for you to arise. Plant your feet solid into the ground. Decide your own limits, and then break right through them. Become something more. It's my time to rise.